million new barrel equivalents a day, so oil and gas, off about a 20 million base, so push down energy prices. And once the deficit really is under control, we won't be talking about one or two rate cuts. We'll be talking about getting rates back down, to 2%.
There's a lot of talk, as you know, about getting the deficit under control, but President Trump in his first term did not get the deficit under control. I mean, if you look at least the Committee for Responsible Federal Budget, they say under his administration, we added $8.4 trillion, and $4.3 trillion of that was not COVID related. We added a lot under Biden as well, but actually substantially less than under President Trump.
Yeah, well, they're using CBO projections, not the actual numbers.
Well, talk about taxes, because that's also a concern. In that piece you refer to, Bob Rubin and Ken Chenault, they actually said there's a problem with the tax, extending the tax cuts that we had back in 2017. If you extended that, that would really substantially increase the deficit, because only, and I think this is a CBO number, you correct me if it's wrong, but only 20% of those tax cuts actually paid for themselves.
Well, I think this time around, and I think with Trump 1.0, we got to stop the clock at the end of 2019 because COVID was a game changer, and I think that there is big appetite for pay-fors this time. So I think we would get this Orwellian named Inflation Reduction Act under control. I think you'd save $1 trillion on that. I think if you empower states on Medicaid, that's another $1 trillion. I think that there will be some tariff income. So I think that there is a big appetite to reinstate the tax cuts, but with pay-fors.
And that, of course, was Scott Besson of Key Square Capital with our own David Weston, who's sitting next to me on set. Really interesting conversation with a potential Trump pick there, of course, about Trump tax cuts and what they might look like under Trump 2.0.
Yeah, and he talks with the former president, I think, fairly regularly, and he gives him advice. I don't know whether he accepts it or not, but he has some view into what President Trump thinks about the economy. But you notice in that discussion, he really is emphasizing the bottom 50% or even the bottom 25%. It's really a populist message. A lot of the people he says benefited from this great economy are at the top of the income spectrum, not the bottom. Those are the people I think Donald Trump really wants to speak to.
Around this table, you got a couple of New Jersey gals, right? I'm a boy from Westchester. For us, these weren't tax cuts at all. In fact, my tax contribution has at least doubled, if not more, because the state and local tax deduction was taken away by Donald Trump in 2017. Do they intend to push that forward as well?
Well, I don't hear anything that they want to. And let's think about it for a minute. I'm not sure that Donald Trump is too worried about people in New Jersey and New York. He doesn't think they're going to get to vote for him anyway. He's worried about a different part of the population that cares a lot more. And they think, and if anything, maybe we stick it to those those Easterners, who are spending too much, they would say, in their government anyway. This will get some fiscal discipline into New York and New Jersey.
Taxes used to be a boring topic, but the reality is it's pretty key moving forward. And there's this headline from the Center on Budget and Policy Priorities recently saying the 2017 Trump tax law was skewed to the rich, as you were saying, expensive, and failed to deliver on its promises, needing a 2025 course correction. Could anything be different next year if Trump were to gain office? Well,
it's interesting to hear from Scott Besson. He is, and to some extent, saying Trump 2.0 is not going to be simply an extension of Trump 1.0. I mean, you heard him say, if we can get our arms around the Inflation Reduction Act, we can save $1 trillion. Or we can delegate to the states some of the Medicare, we'll save $1 trillion. He's looking at saving some money, which, of course, President Donald Trump, when he was president, did not do. If you look at the amount of money they spent, it did not curtail. In fact, the Manhattan Institute, which is not a hotbed of liberal thinking, the Manhattan Institute did an analysis of President Trump who said, actually, he added $3.9 trillion to the deficit, above what the line was they expected from the CBO going in. So he's got a little bit of a pivot to make to say we're going to save money this time.
All right, David Weston, great conversation. Of course, tune into Wall Street Week with David tonight at 6 p.m. New York, 11 p.m. in London. This is Bloomberg.
Let's get to the trading diary, what you need to be watching today and next week. Bank earnings continue with Goldman Sachs reporting Monday, followed by Morgan Stanley and Bank America on Tuesday. All of next week, Bloomberg is going to have special coverage on the ground in Milwaukee for the Republican National Convention. And then U.S. retail sales are due on Tuesday. On Thursday, we're going to get the European Central Bank decision, and that's a lot. That's already a lot. Do I need to go on?
No,
I'll stop.
Let's move on because it's been a big week for ETFs as small caps see the biggest flows in a decade or so. Athanasios Sarafagis, he is an ETF analyst with Bloomberg Intelligence. He joins us now for ETF Friday on set on a Friday. Obviously, yesterday was an important day in the market. You saw that rotation trade. Where did that cause money to move when you take a look at the ETF level?
Small caps was definitely the biggest. This is probably, I think, one of the most toxic relationships. It's like every year, everyone wants small caps to work. It's an election year. Everyone thinks it's going to come back. Money rushes into it. Performance always doesn't really live up to expectations, and it tends to move out. So anything just moving away from large cap, that was like really the big trade for yesterday. Equal weighted, anything not Mag 7, that's where most of the money tonight
I used to be on the ETF show.
You did.
With Katie
Right.
and Eric. And we saw a ton of new ETF launches that just kind of started to taper off. How's that looking this year?
No, it's the opposite. It's ramping up.
Yeah?
The launches are getting they're
Back
getting
up again.
intense. They're getting intense. There is now 2x levered micro strategy in the filings.
Single stock ETFs?
Single stocks. I think it's speaks to the frothiness a little bit in the market, right? Launches always tend to kind of follow how market sentiment is, and it seems like it's pushing the limits a little bit.
I'm going to play my role on this show and be the boring one again because
It's not boring.
TLT. What about
Okay.
treasuries?
Yeah, that's boring.
What about
No,
treasuries?
that's extremely important. Long duration bonds. Let's go.
That's an exciting one. That's not boring. That is finally starting to work. That has lost a lot of money for a lot of investors because they were always fighting the Fed, especially last year, and the Fed wasn't cutting. Finally, it looks like you might get a cut. That trade's starting to work. It's still, TLT is always a popular one. That definitely took in some money yesterday. It's on a 2-week win streak in terms of flows. So I think people are maybe starting to be more confident in fighting
Well,
fighting
if
the Fed a
you
little
thought
bit.
TLT was exciting, how about TMF? That is a triple leverage 20-year plus
Too much fun?
treasury. It's almost too much fun. People keep pouring money into it. They keep getting burned. And I think that's so interesting that people just keep trying to make long duration work, just like they try to keep making small caps work.
Yeah, I think, it's anything levered up is obviously more exciting. But yeah, I think the two big things are going to be the Fed fight, that might continue on, and then trying to see if you can move away from the Mag 7, whether it's small caps or equal weighting or smart beta or one of these strategies.
All right, Athanasios Sarafagis of Bloomberg Intelligence, thank you so much. And tune into that ETF show, ETF IQ, every Monday at 12 p.m. Eastern. Matt won't be there, but I will.
And we're going to get another let on these bank stocks before you let you go here. Of course, Citi's analyst call about to begin here, and it was a tough day for financials. We are still seeing JP Morgan down about 1.5% on the day. Citigroup now extending losses to 3.2%, almost 7% on Wells Fargo. Of course, another week of bank earnings ahead, Katie.
Yeah, a lot of red on that screen. We'll see how everyone else fares next week. The CFO of Wells Fargo, he joins Bloomberg TV at 3 p.m. Eastern. But that does it for Open Interest. I'm Katie Greifeld along with Shanali Bassick and Matt Miller, and this is Bloomberg.
heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco and New York, this is Bloomberg Technology. Coming up, AT&T. It reveals a massive new cyber attack. Details ahead.
And we'll bring you the details on Tesla's robo-taxi unveil delay.
Plus, Amazon and General Catalyst, they bet on an AI robotics startup. But first, Ed, what have you got on the AT&T hack?
Yeah, this is our big breaking technology news story this Friday morning. AT&T in a regulatory filing has disclosed a major hack of customer data. It relates to basically all of their cell phone customers for a period of time in 2022, the beginning of May to the end of October. It is a broad spectrum of customer data, but right now the belief is that that data that has been obtained by malicious actors is not publicly available. We're actually way off session lows on the stock, down 0.7%. We have been down kind of the most in about a month. It's kind of a hard to gauge situation. I think the main point is that we're still assessing, Caroline, the vulnerability of that customer data. But the context, I think, is that this is a big hack. This is something that, and it's different from a hack a year ago, which we've already talked about.
Well said. The context is this has happened quite recently. Before we get straight to John Butler of Bloomberg Intelligence on the hack, as Ed mentioned, John, AT&T has said it currently doesn't believe that the data is publicly available. What is the damage?
Well, I think the damage for AT&T could be to their brand image in the near term. The one thing I'd say, Caroline, when you think about it is, think of all the hacks that have happened with Fortune 500 companies over the past year. It's become quite common. And so I think from a consumer standpoint, people may be more ho-hum about it than they would have been, say, 5 years ago, given how common hacks have become. Having said that, this is bad news for AT&T in the sense that, as Ed just mentioned, it's the second big hack announced in less than a year.
I want to bring some of the latest news we've got, John, to you and our audience just before we came on air. To be expected, but we started to hear from regulatory agencies and bodies, and AT&T had already said they were in touch with law enforcement, but the FBI says it's been contacted by AT&T about this. The FCC is investigating the massive hack of AT&T customer data. The question is, what is the vulnerability to AT&T? What is the risk to the company from this point?
So I think regulators are going to look into how it's handling its data. So to be clear, this hack was not on AT&T's network. To be clear, its network was not breached. It was housing data with a third-party cloud provider. So it generates massive amounts of data through call logs, right? When you call someone, it logs your number and the number being called. That's the type of data that was stored on, as Bloomberg reported, Snowflake's data platform, and that's where the breach was. So I think data regulators or telecom regulators are going to look into data storage practices, and of course AT&T will be open to potentially consumer lawsuits from this.
To that point, we reached out to Snowflake as well, John, and the company saying we have not identified evidence suggesting this activity was caused by a vulnerability, misconfiguration, or breach of Snowflake's platform. Is there any read across to more broadly how companies like AT&T do work with third parties?
So I think, like a lot of Fortune 500 companies, a lot of data now is moving into cloud storage because it just isn't practical in the age of data to store everything on premise. So I'm sure AT&T is going to do a reevaluation of its vendors. I'm sure a lot of companies do that routinely. And for Snowflake, I think they are probably, having spoken with our analyst here who covers the company, they're probably going to lean much more heavily into securing their platform and augmenting the level of security around the data that's housed on the Snowflake network.
John Butler, Bloomberg Intelligence, thanks for breaking it all down for us. We appreciate it. Meanwhile, we follow on from an incredible scoop from our own Ed Ludlow. and Dana Hull yesterday that Tesla has been, of course, delaying that rollout, that unveiling of its robotaxi that was set for August the 8th by a couple of months. Now, we're down on a 2-day basis, but we have recovered somewhat on the trading today. Dan Ives, I'm pleased to say, Managing Director, Senior Equity Analyst at Wedbush, joins for more. And you put out a note very quickly on this reporting saying the delay did not change, ultimately, your bullish call on Tesla. Why not?
Look, I mean, it's 2 months. We're not talking 9 months, a year. You'd rather them be what I view as kind of a jaw-dropper event. And that's what really needs to happen in October. And obviously, the delay is not what you want to see. So no one's popping champagne when you hear that there's going to be delayed, congrats to Ed and Dana on the story. But in terms of the AI story, FSD, the next phase of Tesla, that's unchanged. That's why in our opinion, this is just more an air pocket period to get on to what I view as gold at the end of the rainbow.
Let's talk about some of the golds at the end of the rainbow. Ed, I mean, we had seen a run-up in Tesla's stock, previous week up 27%, but we did see a fall yesterday.
Yeah, and look, what really surprised me overnight was all of the retail investor community very publicly on X saying to Elon Musk, like, can you confirm this? Can you confirm this? Like, Bloomberg stands by its reporting, and we always reach out to Elon Musk and any other avenue at Tesla to ask for comment and verify. But Dan, what was it then? I know that you remain bullish on Tesla, but when I said you were coming on the show, a lot of folks in that community were saying, well explain the 8.4% drop that happened in Thursday's session. Is that just because the run-up in the stock that preceded it, or is it because of genuine concern?
No, I think it's more the run-up. Look, this is going to be a historical day, whether it's 8/8 or 10/8 or whatever day it's going to be in October. A lot of anticipation going in here. And in my opinion, Tesla's more of an AI robotics play than just an auto company. And investors, they don't like delays because then it feeds into that narrative. And obviously the bears, they focus on in terms of empty promises. And I think it's important, and this is the most important thing, that when they have this event in October, it doesn't disappoint. It shows the path for robo-taxis, shows autonomous, shows the AI vision and monetization. 2-month delay, that's a rounding error relative to where we see longer term. As we've said, I think the AI story alone is worth $1 trillion for Tesla.
Mr. Ives, we always appreciate having you on this program, Bloomberg Technology. You are unwaveringly bullish on everything. And we just showed a graphic with your coverage, right? All the stocks that you are across. 30 buys, 3 holds, and 0 sells. So again, I kind of think, Caroline, what would it take to make Mr. Ives a little more cautious on Tesla? What is it that he would see that would make him rethink his call, Caro? I don't know.
Yeah.
Slow down.
I mean, what I'd say, Ed, to that point, look, we've talked, for the last almost 25 years, really pound the table on tech. And of course, we've had bad calls in there as well. But our view, especially where we are, and especially the last decade, but especially the last, I'll call it 18 months, this AI revolution's just starting. So when I look at Tesla and talk about what would make us negative, we talked about a quarter or two ago that Musk needed to step it up, right, in terms of adult in the room. I think he did that. I think deliveries was important for 2Q, and I think, you saw a lot of the bears going back into their caves for that. But you need to continue to see demand stabilization, no more major price cuts, and October, you got to deliver in terms of this next phase of the story, in terms of robotaxi.
I'm really interested by the take that you're like, this is an AI robotics play more broadly. That's certainly what we've heard from Elon. Apple suddenly has got on the AI bandwagon as well. They're also talking up production, at least for their suppliers. That's what we reported yesterday. How are you feeling about the AI play for that big company that you're also an outperformer?
And we've talked, the consumer AI revolution goes through Apple. So when you think about WWDC, and I'll compare it a little to maybe a robotaxi day, that was a historical day. And I think that's where investors started to recognize the keys to that kingdom is Apple. And we've talked about a huge part of what I think, not just the valuation, but catalyzing this next upgrade cycle is going to be Apple Intelligence and AI. And that just speaks to a broader view in tech that we see with Google, Amazon, of course, Nadella, and Microsoft, and godfather of AI, Jensen, and NVIDIA.
Dan, I want to just remind two specific points to our audience that we reported. One is that part of the robotaxi delay was because I think Elon Musk wanted more to show. We said via sources that they wanted to have more prototypes, but they also had some design rethink. And in the same moment, Uber and Lyft jumped 5% in the session. What did that tell you about how seriously investors in the market take Tesla in basically an app-based ride-hailing platform that Tesla might introduce?
Yeah, and I also, Ed, I'd say, I mean, you get an England win and that scoop. It was a good day for Ludlow, right? And I think when you talk about the AI piece, yeah, I mean, I think there's worries about this fleet and what that could ultimately look like for Uber and Lyft. So that negative for Tesla is viewed as a positive for Uber and Lyft. I don't view it as a zero-sum game. I think some of the negatives specifically on Uber is overdone in terms of what this is going to mean from a robotaxi fleet perspective. And I ultimately believe that's something where like they're going to have partnerships as well, Tesla, when it comes to rideshare. But 3-5 years from now, I mean, there's going to be a decent percentage, whether it's 10% or 20%, that ride sharing will not have a driver.
Be interesting to see if Waymo's still in that conversation as well. Dan Ives of Wedbush, thank you. Happy Friday. Grateful to have you on set. Two names that actually didn't come up there are Rivian and Lucid. Look at the gains we're seeing in Friday's session. You know, I talked with the team in equities, Caro, like what's going on here? And I think it's just risk on for risk on's sake. Both, you know, over a long-term period downtrodden, but rebounding super significantly this Friday.
Yeah, we've got a little bit of macro weaving in, helping boost that risk appetite. PPI, maybe not it, but maybe there's a bit of a hope around the dialing back of inflationary pressures. We're going to talk it all with Anna Rathbun, CIO of CBIZ Investment Advisory Services, joining on her market outlook. This is Bloomberg Technology. Let's get a bit of a macro picture right now in the markets. There's risk on for tech names. The Nasdaq goes higher, more than 1.2%. Volumes higher on this benchmark as well. And that's as perhaps we get a feel-good music coming back in when we're looking at consumer expectations for inflation dialing down to 2.9%. Yes, US producer prices were climbing a little, but actually if you dig into the personal consumption expenditure price index, that didn't look bad. Two-year yields, they fall. We're seeing actually Europe on fire. Stock markets more broadly around the world doing well, albeit maybe some in Asia sell off, Japan intervening once again. But We want to get to the macro picture and what it means for tech stocks. Anna Rathbun's with us, CIO of CBIZ Investment Advisory Services. And look, this tech market has been what's dragged us higher, Anna. Can it continue to do so?
I think it can, and here's why. There are some weaknesses in the economy, as we've been talking about, I think, for the last month or so. And when there are weaknesses, there's bound to be cost reduction and cost management, as well as margin pressure. So if you look at it from that perspective, the cyclical areas of the markets are going to continue to be pressured. What does that mean for tech stocks? We have believed that the tech stock rally has not just been an AI phenomenon, it is also a quality phenomenon. So when you have tech stocks running, really the companies that are at the Max 7 companies that have given us more than 50% year-over-year earnings growth in Q1, there's a reason to be in those stocks other than AI.
Right.
So if you continue to see economic pressure, we think there's more room for quality stocks to do well.
Anna, a single session a market does not make, but I found yesterday very interesting, you know, the moment that Dana and I and Caroline reported that the Tesla news, it clearly had an impact on the index level. And we all reflected that it was the worst performer on the S&P 500 and the NASDAQ 100. But the biggest points drags were NVIDIA and other names relating to AI, be it on the software side like Microsoft, I think. Is there a lesson to be taken from that in yesterday's session?
Well, I think the lesson is that investors had been flocking to them because they're heavy flush with cash, little debt, and that is the place to be. And when the Fed it lowers interest rates, as the CPI numbers seemed to suggest yesterday, we're going to have a rotation into more cyclical areas that had been really pressured downward. And so I think the lesson yesterday, it was a confirmation for me, actually, that a lot of the reasons for the tech Magnificent Seven going up had also been quality. And that the reason for believing that Max 7 can continue to do well going forward, it was a confirmation.
Well, therein lies the question of earnings and proof and fundamentals. Look, the banks today not looking good, Anna, but all eyes continue to be Netflix as they come first. But then some of the Mag 7, as you mentioned, can they support the valuations with the earnings growth that many are factoring in?
Yeah, the valuation component is the sticking point. The question is, how much of the valuation is reflective of earnings? How much of it is reflective of AI? And how much of it is just investors flocking to quality? And that's very difficult to tease out. On the AI component, it's like, how do you even price hope? Because frankly, I mean, we are seeing AI kind of filtering into the consumer life through, I guess Rufus was the news today to fetch, information from Amazon. But we still don't know exactly how it's going to be expressed in the productivity component, the labor market. So that is the sticking point. And that's why we're pretty much balanced in terms of our investing. We're very, very diversified. When the markets seem to be irrational, we ride it and then we rebalance it, taking the gains, and that has been our strategy year to date.
Anna, the world was watching last night in the context of NATO summit press conferences and a US presidential election. If you are an investor operating in the technology sector, do you look at it as well and think about what might happen to the areas you put money depending on the outcome in November?
Well, so the big threat, I think, to big tech is regulation. And I know there's been a lot of talk about one-party rule in Washington, and that's really, it's way too early, but I think there is a fear of that. If we do have a one-party rule, it's not so much just about the White House, right? It's about passing of laws. And if that's the case, then it changes the landscape for not only tech, but definitely for AI, because there's a lot of fear around it. So I would say that that's the uncertainty that is facing us in the future.
Anna Rathbun, CAO of CBIZ Investment Advisory Services, thank you very much. Now, coming up on Bloomberg Technology, there are growing calls on the Hill for a probe into Microsoft's AI deal with the Emirati company G42. We have some more details next. This is Bloomberg Technology.
Now, key Republican lawmakers, they are now calling for a formal intelligence probe into the budding AI partnership between Microsoft and Abu Dhabi AI firm G42, with a focus on the Emirati company's ties to China. Let's bring in Bloomberg's Mackenzie Hawkins. We've heard murmurings, worries, now it's more formal. What is key, the risk here for them?
So we have yesterday House Foreign Affairs Committee Chairman Mike McCall and the chairman of the China Select Committee calling for a formal Biden administration intelligence probe into this partnership between Microsoft and G42. This deal, which has Microsoft investing $1.5 billion in the hottest AI startup in the Gulf, has attracted a lot of scrutiny in Washington on issues ranging from human rights to the risk of sensitive American tech being diverted to China. And folks in Congress have been frustrated for a long time about what they see as a lack of transparency from the Biden administration. They haven't gotten a comprehensive briefing, and they're now saying it's not enough for the U.S. government to be working on sort of general frameworks behind closed doors. They want to see the intelligence community prepare a formal assessment and evaluate all of the national security risks that they've identified.
Mackenzie, you and I have been through a similar story together with CATL, the Chinese battery maker, and its relationships with U.S. automakers. And it was kind of the China hawks that were doing this in DC. How analogous is this G42 and Microsoft tie?
So we're looking at, two different types of investments. The CATL thing that you mentioned has a partnership between CATL and Ford for a battery plant in Michigan. But it's not actually a direct investment by Ford into a Chinese company. And in G42's case, this isn't a Chinese company. The concern actually is that if the U.S. allows sensitive American technology, everything from AI model weights to the NVIDIA H100 chips that would be necessary to actually stand up a data center, that China would be able to use G42 and the UAE as a country as a backdoor to access technology that the U.S. has cut China off from. So these are sort of different situations, but a similar tide of concern in Washington that's been consistent over the past couple of years, that any deal between a U.S. company and a Chinese company or a company with links to sanctioned Chinese companies poses an inherent national security risk.
Bloomberg's Mackenzie Hawkins, always on it. Really appreciate your reporting this Friday. Thank you. OpenAI has come up with a set of 5 levels to track its progress toward building AI software capable of outperforming humans. It's the startup's latest effort to help people better understand its thinking about safety and the future of AI. Bloomberg's Rachel Metz is here with the details. I saw you put this out last night on social media, and I think for the everyday person right through to investors and AI industry participants, this is kind of a set of codified rules that might be helpful. What are they?
So the company has these 5 levels, and they also told employees that they believe they're on level 1, which is chatbots, similar to ChatGPT, which is probably their most popular product. They're sort of on the cusp between level 1 and level 2, which they call reasoners. This would be machines that have more of the reasoning type capabilities, similar to what humans today can only do. They put this out in part because they want people to be a little bit more aware of how they're thinking about this process of trying to build artificial general intelligence, which has long been the company's stated goal. Whether or not they will get there is another story, but they've been working on this for quite a long time.
And Rachel, I mean, to that point, Sam Altman himself has said maybe we get to AGI in the next decade, but has there been any whisperings of ultimately how far along, how quickly we could get to the ultimate level 5?
I mean, I think everybody has a different opinion on this. I mean, one of the things we have to think about is this is a very rough draft in progress thing that they're working on here, as they were very clear about saying, and they're going to be taking feedback from a lot of different kinds of people. But nobody can really agree on what it even would mean to have artificial general intelligence, AI that can outperform humans or do all the things that humans today can currently do. So maybe we need to work on that too, figure out what do we mean when we talk about that? What would that look like?
Bloomberg, Rachel Metz, all over trying to gauge the risks that is to artificial intelligence. Meanwhile, coming up, we're going to be discussing the state of crypto markets. Tomas Perfumo is joining us, head of strategy over at Kraken. Ed, some interesting news on IPOs.
Yeah, some breaking news. The Wall Street Journal is reporting that StubHub has delayed its plans for an IPO until at least September. And the rationale that the Wall Street Journal is reporting from StubHub is that we have some choppy market conditions, StubHub being the sort of online resale marketplace for tickets. Interesting one. Stay with us. We'll be right back. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. And I'm looking at the markets really quick, Kara. I think the story this Friday is very much like Fed bets, cut rate, something like that's going on. We're looking at economic data. But the conversation we had earlier in the show about also thinking valuation, what's happening in the election is at play. NASDAQ 100 up 1.2%. Tesla's a really interesting component of that, right? It's rebounded from its biggest drop since January 24th on Thursday. It's now up 3.4%. Generally, there is a risk-on attitude, and the EV names, others like Rivian and Lucid, are caught up in that. I've also been thinking a little bit about Bitcoin. You know, we do say it's kind of our go-to risk asset from time to time. Not a lot going on over the course of the week. It's a weekly gain of 1.6%, but at $58,000 per token, we're trading at a level that we were kind of at in February and March before the steeper climb tied to the approval of spot Bitcoin ETFs. And I just don't see a lot in the moment out there. A lot of our audience will say, well, we hodl, you know, we're all about the long term, but we do a little check on it, and then maybe it's back to being a risk asset along with everything else in a risk-on environment. I don't know.
Well, if you don't know, we've got someone to ask. Thomas Parfumo is with us, head of strategy at Kraken. And Thomas, look, there's been a lot of supply-side issues weighing, at least sentiment-wise, worries about the Mt. Gox issuance coming back, money being given back. But and German government moving things around within wallets. But fundamentally, what is our next catalyst? Is it the ETH ETF, if and as and when it comes?
Yeah, so I think in the short run, I'd say there's about 4 big catalysts in the second half that I'm looking out for. So broadly speaking, risk assets, we're talking about the macro economy. So Canada, Europe already cutting interest rates. Question is, when is the Fed going to do it and to what degree are they going to do it? With crypto specifically, the Ethereum ETF launch is a big deal. That brings a lot of attention on crypto. Again, it brings a lot of capital flows. It's a rising tide lifts all boats story. Looking forward, U.S. election sets the tone for policymaking and the legislative agenda for the next 4 years. And then beyond that, I think it's just the ongoing trend of adoption of Bitcoin, global engagement with exchange-traded products like the UK and Hong Kong launching their own, as well as increased access to crypto ETFs here in the U.S.
And Ed, actually, Tomas mentions an election here in the US, and that's something we've been thinking a lot about and the impact on crypto, right, Ed?
Yeah, I mean, one of the things I reported, Tomas, was this idea that Vivek Ramaswamy had acted as like an intermediary between Elon Musk and Donald Trump, former President Trump. And one of the areas that they found a renewed common ground was on crypto. So I wanted to ask if Kraken kind of has a scenario or game plan for either case in this election. What happens in crypto markets if it's Biden, or what happens if it's Trump? Or, after last night, we may ask if it's a different Democratic nominee. We don't know.
Yeah, I'm not an expert on the political spectrum here, but I will say that when it comes to the U.S. specifically, it's really about legislative action and developing clarity for this industry. And when I think about the issues that we've seen this year, the progress we've made, it's really been light progress along the Congress where they've passed 2 bills, more recently FIT 21 and SAB 121. And what's interesting there is it showcases some of the bipartisan support that's emerging for crypto legislation in the Congress, at least. And so even though you've hit barriers at the executive level, still good progress going forward. I think, of course, the Republican side of things seems to be more pro-crypto, more progressive in that sense. You have Trump going to Bitcoin Nashville in a couple of weeks, so we'll see how it plays out.
Tomas, can I make a hard pivot to football, or for our American audience, soccer? Regular viewers of this show will know I'm obsessed. And so I note the partnership with Atletico. Well, the thing I've always thought about Atletico Madrid is they have a massive following in Latin America, even though they may be the smaller of the clubs in the city of Madrid. Just explain why you did that.
Sure, so I'll try to keep this short, but Kraken was founded in 2011 with this ambitious vision to be the most trusted and secure place to buy crypto anywhere in the world. And when you think about our 13-year legacy, pioneering things like proof of reserves audits, things like being a day one supporter for Ethereum when it launched, being a day one supporter for staking when Tezos launched this concept, and even today, making crypto accessible to the world. Now, we feel like we've earned the right to boast about this legacy being in the market for 13 years, but it's only in the last year that we've really started to bring our brand out into the world. So things like our F1 partnership with Williams Racing, or even this new partnership with Atletico Madrid, one of the most iconic football teams in Spain. And so I think it's really just a showcase that we're trying to get Kraken known globally in a place that we have already operated for a number of years. And so we're really proud of everything that we're doing now.
Marketing, Tomas, to an audience that you want to come and use the product, but also maybe is marketing to an investor base that eventually you go public into. Is that something that you're eyeing in terms of this market?
I got nothing proprietary to share here, but I will say our mission is to accelerate the adoption of crypto. Any strategic paths available to make that happen is something we're going to be exploring.
And look, we pass the numbers. We look at a 58,000 handle on a Bitcoin, and we've been looking at what the altcoins have been doing in the meme coin rush that we've seen. But ultimately, are we still seeing money move into the overall ecosystem for the second half of the year, or do we trade where we're currently at, do you think?
So I think a lot of it hinges on the Ethereum ETF and the launch of that. So a lot of the market sentiment is trying to gauge what kind of capital inflows do we see from that event in general. So from what I've been able to gauge, I think the market is pricing in something along the lines of $750 million to $1 billion of net inflows into Ethereum ETF products on a monthly basis. And so if we start to match that, I think that creates positive support for the industry. If we surpass that, note that Bitcoin was at a pace of north of $2.5 billion. That's where you start thinking about maybe Ethereum tests all-time highs in the mid 4,000 range. And again, rising tide lifts all boats. One last note here is when I look at the prior all-time high back in March for Bitcoin, that's what I'm calling a quiet peak. We didn't see similar levels of extreme volatility or similar levels of unprecedented volatility of signups on our platform to suggest that you really had peak momentum of lots of people, tens of millions, hundreds of millions of people coming into the industry for the first time.
Hundreds of millions. Tommaso Parfumo, we thank you, Head of Strategy at Kraken. And what else are you looking at?
So some of the other big news stories in today's Talking Tech. First up, a rare failure for SpaceX. The company's Falcon 9 rocket deployed 20 Starlink satellites, but into the wrong orbit. In a post on X, CEO Elon Musk said a portion of the upper engine failed for unknown reasons. SpaceX has said it made contact with 5 of the satellites and will attempt to reposition them using the attached thrusters. Within the last hour, the FAA has announced it will require a probe into that Falcon 9 failure, but I would say that's largely procedural. SoftBank strengthens its chip investments. The Japanese investor acquired UK semiconductor startup Graphcore. The company is set to operate as a SoftBank subsidiary and will keep its management team. The financial terms of that deal were not disclosed. And Samsung is facing more walkouts, this time at one of the company's most advanced AI memory chip plants. Several hundred workers joined the protests on Thursday and Friday as the campaign for higher wages continue. Union leaders have told Bloomberg they're targeting smaller but important complexes in the hopes of amping up pressure. Caroline.
Fascinating. Meanwhile, stay global with the Russian story now. Waging a war under the sea? This question has been emerging after a worrying pattern of missing underwater cables. Bloomberg's Jordan Robertson has the story.
In 2021, an unexplained incident occurred off the coast of Norway. An important undersea data cable had been damaged, and no one could explain why.
Something was obviously seriously wrong. Nothing worked anymore. No instruments, no sensors. Where the cable was supposed to be, there was no cable. You just see mayhem.
At the bottom of the world's oceans lie an essential network of data cables. They stretch hundreds of thousands of miles around the world.
Information flow, communications, banking system, financial communications. It's a vast network and it's extremely vulnerable.
Damage to any of them could be catastrophic.
It could spread a panic, disrupt the normal functioning of states.
In the last few years, there have actually been a whole series of incidents involving undersea cables. These may not be freak accidents. They may actually be a sign of something more sinister. Sabotage.
That was epic. And that was Bloomberg's Jordan Robertson, who you can catch the full story from on Bloomberg.com. And there's also a much longer video report on the issue. All right, coming up, we're going to be joined by the CEO of Standard Bots on the company's fresh Series B round and how they're going to use the new funds. That's next. This is Bloomberg Technology.
talk about robotics, AI robotics. The startup Standard Bots, it's raised $63 million over a series of deals, with the majority of the funding haul, which has not previously been reported, coming in at $39 million, Series B round, led by General Catalyst, with participation from some key strategics, Amazon Industrial Innovation Fund and Samsung Next. Here from Standard Bots CEO, Evan Beard. Great to have you here.
Thank you for having me.
How quickly did it come about?
Came really quickly. General Catalyst actually preempted our round, so I think it shows how hot AI and robotics is at the moment.
Okay, does this feel like slowly, all at once? Because I'm pretty sure you've been at this for quite a while, and already you've had your robotic arms in companies.
That's exactly right. I think it's a moment in time where we realize this is happening.
Evan, really grateful to have you on the show. I want to go into those strategics. You know, we've done a lot on this program about Amazon, robotics in the warehouse. Samsung, I guess, is the opportunity down the line in the manufacturing context. What are you kind of hoping for there?
Yeah, so we realized a few years ago we can make an American-made robot that's easier to use, more affordable, and most importantly, capable of performing many more tasks than other robots out there. Most robots today, they have this rigid programming it's sort of like code, something that resembles code. And so we're focused on this new paradigm where you just demonstrate the task that you want the robot to perform, and then it can learn how to perform that from the demonstration autonomously.
So we're just showing some pictures of the technology we're talking about. We're not talking about humanoid robots. We're talking about cutting edge of robotic arms, essentially. Why is yours better than the rest? We've had some similar things on the show, Evan.
Yeah, I think we don't need to create legs and a torso to make a huge impact. So our approach is we make a device, and this device, it's sort of like scissors, but it can grip instead of cutting. And you can show how to assemble something, show how to prepare food, what have you. And it learns from that demonstration. And we think our approach with this device, it's a much quicker way to market than the humanoids, and it's going to make a really big impact. And we can take it to market this year. We already are with some really big customers.
Look, how hard is this? What sort of academic affiliations are you having to have? How much are you having to push forward innovation with the funding that you've got? Is this now about hiring talent? Is it about expanding here in New York?
Yeah, it's definitely hard. We've got an amazing team, so they really get all the credit. But we've hired from places like Cruise, Waymo, Rivian, Meta. So we've got the best of the best on the team. We really think this can make a really big impact in the world. So that drives our team, and it's a lot of fun too. So
I mean, spell out the mission here, because many who are working in manufacturing might be like, well, that's my job. So ultimately, what is the net positive outcome that you want from this business that drives all the people to want to leave Rivian and other key companies to come to you?
Yeah, actually, we have industry stats show over the next few years a shortage of 2 million workers. So it's not so much replacing jobs as we have this huge shortage. And we really think that most of the products we buy are not made in the U.S., or many of them aren't. And so if we can bring back manufacturing, that actually creates jobs. And it's better for national security. It's better for the environment to produce where we use the items. And these kind of productivity boosts, they really lower the cost of food and other items for people who can't afford them the most. So we think it's really important work. They can have a large positive impact. And there's a huge shortage right now in jobs, so I think people can rest assured.
I've listened to Jensen Huang talk about the biggest opportunities to be unlocked by what's happening in large language models, and robotics is front and center for him. What I find interesting is your scale and your location in New York. So talk to me about building the company, talent. Is the money you've raised enough? Walk us through the roadmap of the next couple of years.
Yeah, we're bringing this to market this year in a big way. Talent is I think this is like a really, really fun, other than being a TV anchor like you, this is one of the most fun things you can work on right now in tech. So it hasn't been that hard to attract amazing talent, and I think the mission-oriented focus of the company helps to attract amazing talent as well. But we're going to continue to need amazing people. We've doubled our team in the last 12 months. Our robot orders have gone up 20x in the last year. So we're really experiencing a lot of growth. We're trying to hire to handle the growth and the orders, and we're very excited about the future.
Evan Beard, CEO, Standard Bots. Great to have you on the show.
Thanks so much for having me.
Coming up, we're going to take a look at X's video ambitions and if their efforts have translated into anything tangible yet. This is Bloomberg Technology.
We just want to turn our attention to what President Biden is saying on the platform X. Just a few moments ago, he's posted that 6 weeks ago, I laid out a comprehensive framework for how to achieve a ceasefire and bring hostages home. He's, of course, talking about Israel, Hamas. There's still work to do, and these are complex issues, but that framework is now agreed by both Israel and Hamas. And he says he's making progress. And interesting use, of course, of the social media platform.
Yeah, there's been a big development this morning with X and its relationship with the European Union. The European Union, or the Commission, has basically said that X is the first breacher of the Digital Services Act. I want to bring in Bloomberg's Kurt Wagner, who also has a column out today about X's video ambitions. But Kurt, you will have seen the ping pong on X in the last hour between Musk, Margaret Vestager, Thierry Breton. Explain what's happening, please.
Yeah, I actually haven't seen it this morning, Ed. I'm sorry but obviously there's X is doing a lot with the check marks. That was the big issue that Musk started when he took over, that he was saying, hey, this is something that I'm going to charge for versus something I'm going to give away for free. I imagine, that there's some issues with how they're doling these things out to people. And obviously they'd run afoul of some EU regulations before, so it doesn't surprise me that they're running into this again.
Yeah, I mean, across the board, though, this is something that Elon Musk wants to be able to be bringing back brands, bringing back the talk of driving forward revenue and people's confidence. How is he doing that with video at the moment, Kurt?
Yeah. Well, you may remember that at CES a few months ago, they said that they were going to really push into this high-quality, professionally produced video shows. And they announced a bunch of partners, Don Lemon, Tulsi Gabbard, Jim Rome. And there was this big idea that X was going to sort of be like a second TV, right? You would watch these highly produced things on your phone. Well, 6 months later, a lot of this just hasn't materialized. We've talked about what happened with Don Lemon. That show's fizzled out. Tulsi Gabbard has not posted any shows yet. Jim Rome is posting shows, but I watched yesterday. There were no ads running alongside these shows. So it just feels like this big push, this big sell to rebrand X as this video destination, in my opinion, seems to really be struggling right now, 6 months into this process.
The question is eyeballs, right? So Elon Musk really emphasizes this data point of user seconds, how many seconds user eyeballs are on the platform. If you go to a tweet, you see the tweet views, and if you posted the video, you get separate data. Is there any confidence from advertisers that it is actually being watched if you put video content to the platform?
Yeah, I mean, this debate between views and, someone actually sitting there and consuming it has been a big issue for years, and not just on X, right? We've talked about this with Meta before, Instagram as well. And so I think the issue, and what I put in the column this morning, what I heard from a source is that part of the reason these shows aren't really getting made is that they are having issues with advertiser demand, right? And if people are sitting there throwing money at you, those projects usually get made. But the fact that they're not seeing that interest from advertisers is sort of a sign that, the views probably aren't there, right? Because advertisers are going to want to go where they can get eyeballs. So I don't know the specific numbers behind this, but usually, Ed, as you know, if there's an audience, there are advertisers that want to reach them. And the fact that there's not that interest right now is sort of a telling sign.
How are things internally at X right now, Kurt?
Yeah, I mean, I think it's tough because there's a lot of cost cutting still going on. There was this big push, obviously, when Elon took over. There were a bunch of layoffs, a bunch of cost cuts. Things sort of settled down. But earlier this year, they brought back in Steve Davis, who was, the head of Boring Company. And he was sort of the guy who did the initial cost cuts when Elon took over. And he sort of re-looked at the books. There were some layoffs that happened again. So I do think that they're at this place where they're sort of still trying to level set the business. And, it's now been coming up on 2 years. It's not a super encouraging sign when they're still out there really slashing costs 2 years into this new venture.
Bloomberg's Kurt Wagner, thank you. And I apologize, I didn't mean to put you on the spot. Literally, since we've been on air, Elon Musk has been posting on X at EU officials. The short of the story is that Elon Musk's social media platform X has been hit with a warning from the EU for deceiving users into engaging with potentially harmful content, which prompted that little back and forth with Elon Musk himself on X. The bloc's regulators say they're worried that blue check marks for verified accounts are tricking users into believing these are safe when, quote, there is evidence of motivated malicious actors abusing the checkmark system. I just say, Caro, I wrote to Linda Yaccarino this morning, along with some other staff at X, and offered them the opportunity to come on the show to respond to the EU's prelim warning, but no response.
Maybe by Monday. Meanwhile,
Maybe.
we've got a lot to pass over this weekend. You and I have got a pretty integral soccer/football match to watch. But for now, that does it for this edition of Bloomberg Technology.
The Euros and Copa America. I'm excited for Monday. It was a shorter week for us. We missed 2 days of shows because of Fed Chair Powell, but there was so much happening in the show. So recap on the podcast, you know exactly where to find it: Apple, Spotify, iHeart, and the Bloomberg platforms. Good luck to England for those of you that are supporting, and good luck to all the other teams playing this weekend. This is Bloomberg Technology.
Everything.
From New York City for our viewers worldwide, I'm Shonali Bassick, and Bloomberg Real Yield starts right now. Coming up, the data paints a mixed picture as PPI comes in slightly hotter than expected. After a soft CPI print bolstered bets in a big way on a September rate cut, and Treasuries erasing this year's declines as the traders weigh the Fed's next move. But we begin with the big issue, the road to September.
The economy looks as if it's slowing.
The CPI report.
It's a very welcome development, a welcome surprise. There was some normal